joined by my partner Brandon Averill. Today,
Disclaimer: Eric Averill and Brandon Averill are the co-founders of AWM Capital. Due to industry regulations, it's essential to explicitly state that investment or strategies mentioned on this podcast may not be suitable for you, and you should discuss your specific situation with a qualified, certified financial planner. All opinions expressed by podcast participants are solely their own opinions and do not reflect the opinion of AWM Capital or its affiliates. For more information, visit athleteceo.com.
welcome back, podcast listeners. We have an awesome show for you today. Our guest played 7 years in the NFL, including winning a Super Bowl championship in 2002 with the Tampa Bay Buccaneers. Following his NFL career, he went on to co-found Straightcast, a mobile app that allowed athletes to create their own HD content. They sold that company in 2014 to Fox Sports, and he is now the managing director of Next Play Capital, a venture capital fund that sits at the intersection of tech and sports. Our guest really is the epitome of what we think about on the Athlete CEO podcast: success on the field, respect in the boardroom, and most importantly, leveraging his platform to have maximum impact in benefiting others. And so I'm excited for you guys to listen in to my conversation with my friend, Ryan Nece. Well, Ryan, thank you for coming in on the Athlete CEO podcast. I'm excited for our guest because, you know, as we were just talking before we press record, you really are the ideal Athlete CEO podcast guest with your background as a former NFL player and now in the business world running a venture fund. So really excited to have you on. Thanks for spending time with me.
Yeah, no, I'm excited to be here. I mean, I think the title speaks for itself, and obviously everything that you and your brother in this firm stands for, I believe in, and so, yeah, I'm excited to chat with you for a bit.
Nice.
Yeah.
Where I thought I'd like to start is your transition from UCLA into the NFL. It wasn't a traditional one like a lot of players have of draft day. You know, they're talking about millions of dollars first round. For you, you go as an undrafted free agent to the Tampa Bay Buccaneers.
Yeah, very, not to say it's unconventional, but obviously there's other athletes that have gone that route. But the 2 days of the NFL draft were two very long days for me. Looking back at that time, I was coming off of a senior year. We played well as a team. I thought I had a good, solid career. Leading up to it, I was projected to be, drafted in certain rounds. I was a semifinalist for the Butkus Award, and so individuals that were slated in that spot before had all been drafted. So I had, every inclination that I was going to get drafted at some level. Interesting enough, I broke my leg the last game of the season, which made it really challenging for me to go and work out or spend time in front of teams as they were doing their assessments and diligence on players prior to the draft. Long story short, the draft came and the draft went, and I did not get drafted. And what happens in the NFL, and you know this, I'm sure a lot of your guests may know this, but that is a frenzy for teams to call guys to bring them onto their clubs and have them come to camp because, quite frankly, they need a lot more tackling dummies, right? And they need individuals, some warm bodies to fill the seats and let their starters rest.
Yeah.
And so, as all these teams were calling me to try to convince me that I should come to their team, I'd whittled it down to two teams, and it was between the Raiders and Tampa Bay Buccaneers. And the Raiders made a lot of sense. My father played there. It was pretty close to home. I had a lot of relationships and friendships up in the Bay Area. Everything made sense to go to Oakland. Tampa, I'm like, I don't even know where Tampa is. I didn't know a lot about the team. But yet I was torn between the two decisions. And what was interesting is I stopped, and I remember told both those teams I need a minute. And literally, this stuff is going on. They're calling you back and forth, like, we need a decision. And I told them, I was like, I will call you guys back. I need to make a decision. And they kind of gave me an ultimatum, like, well, you may or may not have this spot, right? They got to sell you on, right? So I ended up saying a prayer. And I said a prayer and really just tried to ask for clarity on this decision. I knew this was an important decision and a moment for me in time that was going to obviously lead me down a certain path. And as soon as I said that prayer, as soon as it was over, I had nothing but a tingling feeling and conviction that I needed to go to Tampa.
Wow.
And so I remember calling the Raiders and saying, I'm not going to come. And they were shocked, and calling Tampa and saying I'm coming, and they were, pretty excited. And what's amazing about that story is, if you fast forward, I ended up playing in Tampa, making the team. We go to the Super Bowl that year. We play the Raiders in the Super Bowl. So I whittled it down to the two Super Bowl teams.
You had the right ones.
God just got me to the winner. So, I really, really obviously was fortunate to go to Tampa, not only to play on a Super Bowl team, but I immediately got around other elite athletes that were true professionals, Derek Brooks and John Lynch and Rondé Barber and Simeon Rice and Warren Sapp and the laundry list of other guys. When I walked onto that field, I immediately saw, hey, this is what it's going to take to be able to not just play, but to stay in the league. And so that, to me, I will forever be grateful that was the team that I started my career with.
Yeah. And NFL it's usually said not for long. I mean, you kind of defy the odds again there, playing 7 years, correct?
Yeah, I mean, not a lot of undrafted guys play very long. Not a lot of guys in general play very long. It's, average is 3 years, 3 games. The average career in the NFL, it definitely takes its toll. It's a tough sport. It's brutal, and it's very challenging the way that the business structure of the sport is designed to give players that are on the bubble after 4 or 5 years the ability to stay in the league. It's, I always tell rookies all the time, the day you become a starter is the day that they're trying to find your replacement. It's their responsibility to find the cheaper, younger version of you. Yeah. And so you got to be aware of that. And that's why, you see all the turnover that there's in the game. There's a few elite guys that stay around, but there's a lot of turnover underneath that.
Yeah, I listened on a previous podcast that you were on. You were talking about understanding the business of the league or of the sport. What would you tell current players today the importance of understanding, the PA to the business side of it, and why is that important to your career?
Yeah, in all sports, I think it's really important. I think we oftentimes, as the athlete, we're in a very fortunate position. We get to show up at practice. Our helmets are there, our uniforms are there, our cleats are there. Everything's clean and ready to go. We go out, we go do our business at practice. Same thing happens on game day. All these things are taken care of. We go out and we shine. But behind the scenes are individuals that are spending a lot of time, a lot of energy to make your job really easy. And for me, it wasn't until that I really stepped away from the game when I was done and saw the business behind it from a media side, the amount of energy and time and money that media companies have to put on just to broadcast one game, right? And it made me appreciate why my job was so important, why my job was so exciting, because of all the things that happened behind the scenes. And then even while I was playing, I was a part of the union, and I was a player rep, and got a chance to see that side of the game and the negotiations between the unions and the ownership groups. And that was important because you start to understand what's important to people, right? You think you're the most important thing that exists, but the reality is that shield, the MLB, the NFL, the NBA logos, those things are way more important than you and a lot more valuable than you and will last a lot longer than you. And so to understand the nuances behind the business and why those things are important, to me was something that helped me focus my time and energy on how I played, where I wanted to spend my time, and quite frankly, it gave me the ability to learn things when I was done playing. So it wasn't just about running X's and O's. I started to understand the nuances of business. And you talk about multi-billion-dollar corporations. When you can understand the complexity on how to generate revenue, how to cut costs, all those things in an NFL franchise, those skill sets allow you to, will help you as you evaluate other businesses and other endeavors.
Yeah, absolutely. If you were playing today, we've seen this huge commitment to analytics. Right? Big data has just come into almost every single sport in a big way, and we saw it this last offseason in the MLB offseason, how it completely changed contracts. And as a player, how would you deal with this data as far as now it's dictating playing time and not playing time and changing contracts? What would your response be as a player?
Yeah, I mean, the interesting part is data's been around the game for a long time. It's just becoming a lot more transparent, right? And information is power, and information gives you leverage. And so the person that usually sits at the table with the most information oftentimes has the best leverage to be able to negotiate the proper deals. And so when I think about baseball, analytics have been around baseball for a long time. You know, it's just been the ownership groups and oftentimes the scouts and others that have used it to their advantage. But now you're starting to see it across the board, and players now are getting access to this information. Agents are getting access to this information. And I, at the end of the day, you know, it's inevitable. We have to figure out as athletes how to make sure we have as much information on ourselves to give ourselves the best ability to make to negotiate when we sit down at the tables. If we just assume that our agent's going to take care of it, or that the team doesn't have all the information, that's pretty naive.
Right.
So I think athletes have a responsibility now to understand who the information that's out there. The other thing that they have a responsibility, we have the ability to now enhance the way that we play and live and find ways to optimize to be more efficient, being more productive. And so now data can tell us, well, wow, you're not sleeping as well as you should. Maybe you should think about taking a nap. Wow, you know, or your nutrition, or your injuries, your muscles may not be firing right. It's amazing the technology that exists out there. And so if you can use that information to give yourself the ability to be better, then why aren't you doing it, right? That's such a small window of time in your career. To me, I would probably try to lean into that area. And some guys, the old school guys, are like, you know, too much information is overwhelming, and then you know, study long, study wrong, and you never end up doing anything in paralysis by analysis. And so there's obviously a fine line that you have to, you know, data's never going to measure will. It's never going to measure heart. It's never going to measure integrity and the intangible things that can help you become an elite athlete. But I'm a believer that too much is given, much is required. And so if you get this information, it's your responsibility to know how to use that information for the good.
Yeah, and I think
it's a lot. I've said a lot there.
It's a lot. I think it's great. And hopefully you surround yourself with people that can help you interpret that data and put that plan together. And we talk to our clients a lot, being on the side of stewarding their wealth, is going, you know, we can only go get a certain amount of return given a certain level of risk, especially where most guys are at. We say your biggest investment and your biggest return on investment is if you extend your career, right? If you put that work in, if you change your swing, if you get a little bit better at your position skill set and extend your career, I mean, you're adding a year to your pension, you're adding a year to 401k, and not to mention the salary that is just not available in the real world after sports. And so if you took that type of intentionality to it and maybe looking at it more from an investment standpoint, it's going to be your greatest return.
Yeah, absolutely. And I think, you know, the great part about numbers and data is it provides the truth oftentimes, right? And there's a lot of people that can talk around things and make things look shiny and make things sound great. And hey, we're going to do this for your returns, or we're going to do this for your career. But the data says something otherwise, right? And so, especially as it becomes to how you're managing your finances and how you're managing, there's a reason why Warren Buffett has said, hey, you know, compounding interest is the most powerful force in the universe, and you should invest over a long period of time and allow compounding interest to help you accumulate wealth. He's one of the greatest investors in our generation, and it's a simple philosophy, yet some people have a very hard time digesting that and get enamored when somebody says, hey, I'm going to give you 100% return in 6 months. And you're like, wow, that's amazing. yeah, but you're going to lose everything you had. You know, you could end up losing everything that you put into that just as quickly. And so understanding risk, understanding the numbers to give yourself the better ability to assess what your own risk profile is, and the best way to put your money to work to sustain. And you may get offended by this, but no advisor that I know of has ever come back and said, "Hey, I made you a boatload of money." Now, a great advisor say, "I protected your money. I've helped you grow your money." But I hear oftentimes that athletes are looking for somebody to make them a bunch of money.
Right.
That when you hear people say that they can do that, that's probably false.
Yeah, a lot of my conversations when, and it's a natural question that you usually hear is, what type of return are you getting me? We literally just had a meeting with an MLB guy who, asked that question: what kind of returns can you promise? And it's more of an education to say, if somebody's pitching you off of returns, it's a salesperson, because the reality is in the public markets, I think the academics and the data behind it kind of shows, for a given level of risk and return, there's not much outperformance in the public markets. And we'll get into the exciting conversation of the venture world and private equity world, but once again, it's still attached to risk, and it's much more about having a plan and preservation. And what we tell a lot of our guys is you've actually won the lottery, in the sense of you're young and you're starting out with money, and so you don't have to take crazy risk if you control your spending and just let it grow, over time. So for you, coming out,
most lotto winners don't go try to play the lotto again. You win the lotto, it's like why try to win the lotto twice? It's like right, that's hard, right? And that would be amazing if somebody could do that. It's a great analogy, because there's no reason to try to go chase it, right? A lot of guys try to go chase something, and it's natural. We're alphas. We want to win at everything, and winning is acknowledged by performance, and performance means I need to have better numbers than you. Well, that means sometimes you're chasing and putting yourself in a very risky position, and could be jeopardize something that you're really trying to build for the long term.
Yeah, you talked about that as a lot of what makes us great athletes, of the risk taking, the self confidence, the determination, the belief if I just work a little bit harder than everybody else, I'm going to outperform. Right? Is that can get you into trouble in the business world, right, or in the investing world. For you, what was the process to learn business? I mean, you're in the NFL, you're there for 7 years, which means you're fully focused on your craft, or else you wouldn't be there that long. But, you had this track record of actually being interested in business and learning. What's that look like for a player who's in the midst of their career?
Yeah, I've always been curious. I'm a curious person. I like to learn. I like to sit down with people and understand the methodology in which they try to live their life and build their business. And so a lot of my learning came long before I even played in the NFL, whether it was at UCLA, watching my father and watching him build a very successful firm, getting introduced to technology early on, started investing in 98, if you can imagine that, started studying the public markets and understanding what companies were doing well in that space and why they had a certain market cap. And what moved the needle for them in the public markets. And so that was something that I did a lot of. My off seasons were spent doing internships. I took classes at Stanford, took classes at Harvard. Again, just I knew sports was inevitably going to end. And I knew my life after sport was going to be long, knock on wood, Lord willing. And so how do I make sure I'm putting myself in a position to thrive after the game? And I had a bunch of friends. All your friends when they're in college and when you're done with school, they're going and working and paying the dues and spending time. And when I was done playing, now they're VPs and senior vice presidents and CEOs, and you're like, man, I'm gonna be like you, and you want to be like them today. But the problem is you didn't pay the dues like they paid, right? And so that was something that I started to chip away at that, and I quickly jumped into an office when I was done playing, started working with the DeBartolo family down in Tampa, Florida, and started to learn their investment philosophies on the real estate side, and was an analyst and sat and read reports all day and was looking at properties all day to assess whether they were the right things that we should be looking at and investing in. And doing that for 2 years was educational, was boring. You sit in an office and you're used to being out on the grass, running around, hitting people, and so you had to change how you motivated yourself. You had to change your scoreboard. I got a chance to get graded and judged every single moment at every single day as an athlete. It might have been 2 weeks go by and nobody's really telling you, are you going in the right direction? So you have to kind of start to make up your own scoreboards and understand how to assess yourself so that you're not just flapping around in the wind and you're going in the right direction. And so all of that. And then I started a tech company and co-founded a business, and I highly recommend nobody to ever try to do that. Because going from an idea on a paper and say, let's go build this company, to understanding the nuances and the complexity of how do you scale a business, how do you raise money, how do you build out teams and different verticals of within the business, understanding kind of your org chart and the responsibilities that everybody has. So all of those things were really hard to learn, and we took a lot of risk doing that. And we were fortunate we got acquired after 4.5 years of battling at that company. But that was the best way for me to learn. And I was in the fire, and I was literally, treading water. This was the only way out. We're like the only thing out of the water. We tried to tread around and trying to survive running a company. And quite frankly, that was me being naive, being young, thinking that everything was going to be easy because you're an athlete. Like everything I've done is easy and you win at it. It's not the case. And we learned an awful lot. And through that, so many other athletes would come to us and ask us for advice. They're like, wow, you guys built this company and you did that. I'm doing the same thing, or I'm trying to invest and help me diligence that. And I would tell them to run in every direction away from that. So, it's a long-winded way again of saying that how I got into the chairs that I got into today was just constantly wanting to learn. And it's one thing to learn. It's another thing to try to learn the right information from the best people, right? And I had a mentor tell me this guy told me two things that I think are really important. One, he's like, Ryan, if you wanted to play the piano, you could go on YouTube, watch videos, pull out a keyboard and start hitting keys around, and eventually you might be able to play the piano. It might be faster to go hire somebody that knows how to play the piano and a teacher, and they probably could teach you. But if you could go get the best pianist that ever play the keys to teach you how to play, how good would you be and how quickly could you be good at that? And so from that, I was always trying to think about, if I was going to learn and wanted to learn quickly, how do I surround myself with the best person? And the other thing that this mentor told me one time was, it's hard to wait, but it's even harder to wish you would have.
Wow.
And, having the patience to say no and feel like that you need to do the diligence that you need to do to be able to come to a better conclusion, that is important. Whether it's with women, whether that's in business, whether that's with contracts, it's hard to wait, but it's even harder to wish you would have. And so those are advice, that was advice that I was given and have continued to this day to try to surround myself with people that are smarter than me, that are literally the world's best at what they do.
Yeah, that's great advice. We see today a lot of athletes getting publicity of being interested in tech, right? It's really the hot story of the athlete and the entrepreneur in Silicon Valley, merging lanes, and whether it's there's some athletes that started a cryptocurrency fund, or there's athletes involved in esports, and some of them just flat out trying to invest in the next tech company. What advice would you give to the current athlete market when they see that, of what's the right way to approach that, and maybe what are some of the pitfalls to be aware of as they start to venture into that space?
So there's a lot in that in that question. I will say that first, just like an athlete is brought onto an organization, most athletes don't realize the time, the energy, the money that's spent into understanding, are you the most uniquely designed pitcher, right fielder, right guard, left guard, point guard, forward in the entire world that I need to bring on my team to help me win a championship. The amount of energy and time that teams put into due diligence to understand who's good and who's great is really important. And if organizations are doing that for young men and young women that they're bringing onto their teams, you need to understand how to do that. You need to start to understand the diligence process, to the vetting process that you have to go through to be able to ask the right questions, so that when somebody puts a deal in front of you, athlete or anybody, well, why is this the best deal? Well, how does this compare to other deals that are similar to this? What are the competitors that are doing something similar to this? And I say that because there are a lot of people right now, a lot of athletes that are in private equity, and there are a lot of just people in private equity.
Right.
And so how do you start to decipher, do I want to be investing with the athlete because I'm familiar with that person, I like that person, they've been in my shoes before? Do I want to be with this random person that's trying to do something similar? None of it matters other than the diligence and the skill sets of who they are, right? And so that's what I would start in terms of, regardless of if it's an athlete or not, if that person's going to play a new game, he's got a new title. He may have been an all-star NBA player, but if he's going to play in venture, well, is he the best guy? Is he around the best guys? Is he working with the best people? That's what I would think of. How do I start to assess that? I think it's really exciting that athletes are taking advantage also of the platforms that they have. They have huge social followings. Their curiosities now have expanded. We have the ability to learn about other sectors and other fields. And quite frankly, there's a lot of opportunities for athletes to look at tech companies and look at private equity deals and see deal flow. But to be able to they themselves and or have a team around them to do the right diligence to determine if they should put money to work in that space is that's a whole nother ballgame. The athletes that are starting businesses, I think about, we oftentimes we hear about the Magics of the world, the Roger Staubachs of the world, the John Elways of the world, the Jamal Mashburns of the world. I mean, these guys were elite athletes and went on and had very successful post careers, right? And then they transitioned into the business world. Well, oftentimes people focus on it. They don't focus on the team, again, that they had around. Right. I mean, these people surrounded themselves and took advantage of the team to be able to source and identify the right opportunities to put themselves in. And so that's something that I think as athletes, it's great to have those individuals as figures to aspire to. Like, I want to be like Magic. Well, you got to understand, Magic also built relationships his entire career. Right. He used to give tickets to every home game. He'd mail you, hey, I'm going to mail you 2 tickets. Come join me at the game. Sit courtside. We'll go hang out afterwards. To the best people in the city. So now he's developing relationships with the leaders of the men and women in the city. And so when he was done playing, that was where his network is, right? And so, somebody told me once, like, what are you willing to suffer for? And being able to transition from the sport and into the business world, private equity and everything, it can be really easy. There's a million deals up. You guys see all the deals that your clients probably see. I see a lot of stuff. There's no shortage of deal flow. There's no shortage of getting access to opportunities. But are you willing to suffer and put in 4 years of time and energy of not ever investing, but reading, studying, networking, building relationships before you make your first investment? Right. Jeremy Liu, wrote the first check in Snapchat for Lightspeed. Great guy, very, very well respected investor on the consumer side. He says he looks at 1,000 deals a year and might make 1 or 2 investments. And he's seeing the best deal. So he's saying no to all those other deals. And he said, I want to find that deal, a diamond in the rough. That's 1,000 to 1 possibility that it's going to work. Are you looking at 1,000 deals? That's what I challenge guys. You're looking at 1,000 deals before you write that check. Right. Probably not. Yeah. Okay, so what's the process and who's looking at 1,000 deals for you to help you do that? There's a lot more we can probably talk about on that question,
That's great. I mean, it transitions into what you're doing now. So you're managing partner of Next Play Capital. Explain to our listeners, what is it is exactly that you guys do, and then how you arrived in this seat.
Yeah, so Next Play Capital, we're a hybrid fund-to-fund platform. 80% of our capital is invested into a predefined list of the top tier venture managers. 20% we use to co-invest alongside those managers. We're fortunate that we're able to invest in great firms, Kleiner, Andreessen, Redpoint, Lightspeed, Khosla, and a laundry list of other firms out there, Forerunner, Cowboy. And we've been able to get access to those firms for a couple reasons. One, because our 20-year history in the space, right? My father started a very successful venture firm and platform, and they built that from over a course of 10 years at about 2.3 billion AUM across all their products. And so being able to learn there in the off season and get an understanding of how they were able to be successful was really helpful for me to be where I am today. Yeah. But it also laid the foundation for both our model and how we run our business, and for the foundation of the relationships that we were able to accumulate over the years. And for us, what's interesting is we've tried to create an environment for our investors that are trying to think about, hey, I have this really great portfolio of publics and real assets and fixed income, and even have some private equity, some real estate. But this other slice, this venture slice that people are looking at, and all the headlines we're seeing, wow, I'd like to put some money to work in there because there's alpha that's being produced over there and there's a lot of returns. Well, the more that we saw people trying to access and put money to work in there, the more carnage we saw. Right? The best investor is failing 70% of the time. And they're seeing 1,000 deals and betting on 2, and they're still failing more than they're winning. And so we felt like for our group of individuals that were trying to invest in this space, to try to alleviate the risk that's associated with this asset class, well, let's find a way to invest across an index, in a sense, of the top funds, and then let's try to co-invest in their companies that they're investing in. That should give us a chance to win. There's like baseball. I mean, venture is a home run derby, and it's not even a home run derby. It is literally, you got to hit tape measure home runs. Right. These funds have to return all their capital. So for every dollar they raise, they got to return $4 to be able to continue to play in the game. So if they have $100 million fund, you got to really return a boatload. You got $1 billion fund, which some of these funds have. You got to return a lot of money. And for you to return a lot of money, you need companies to produce exits that are monstrous. Benchmark, for example, which is one of the most well-respected venture funds that are out there. Their 2011 fund, it was an article in the Wall Street Journal recently, is going to do a 25x net for their investors. That is a phenomenal, monster return. Now, the reality is, just as many companies are started that fail, there's a lot of venture funds that are started that fail. And so for us, we have 570 in our database. There's funds all over the country. But on average, 80% of most of the returns are driven by 10% of the firms in the valley. So usually a small concentration of funds that have been able to produce returns year in and year out. And so that's where we invest. That's where we spend our time. That's where I spend 99% of my energy. The other 1% is with my family. Yeah. But we're always thinking about, investing, but how do you learn? And I know that, that's a big part of your guys' mission. Absolutely. Is not just about putting a dollar to work, but how do you make sure you understand how that dollar is truly working? Because knowledge is power, but knowledge only becomes powerful when it's put into action. And so, this, we spend so much time with our community educating them and bringing them up to speed, so that when they want to make an investment, or when they're going to look at a lot of investments on their own, at least they have a lens that they can do it through, where they're prepared to kind of say no quickly.
Yeah, no, that's your commitment to education is one of the things I just love, and it's so different in the marketplace of what you had said of the patience to make sure the due diligence is done. Is a lot of the deals that come across, right? It's usually followed with, I've got no personal relationship with them. and they need the money in the next 6 weeks, right? And there's kind of this pressure of this, I don't want to miss out, that sometimes our clients have, of just understanding. I think what you said there was so fascinating, and our listeners could easily brush over it, is you said 80% of the returns come from 10% of these venture funds, right? And so take that a step further, is what's the probability that deal that makes it to the clubhouse is worth anything, right? And I think that's a lesson to try and communicate, of going, we're not saying that venture is the wrong place to be. It's choose the right team and go through the right avenues, because it's already a very difficult game, and without access, you're really ending up with really bad deal flow.
Yeah, it makes it much harder, right? The probability of success is much lower. I mean, we can go to Vegas and pull out all our money on 0-0, right, and we might hit it.
Right.
And we might talk about how smart we were, and we understood the timing. We saw the board was going to tilt a certain way, and we saw the way that the guy was going to drop the ball. We got lucky. Right. And so there are firms and there are companies that are created outside that make it and do things and do really well. But to do that takes a lot of risk. And I kind of always come back. I think the first question anybody should ask is, why you? Why are you the luckiest person in the entire planet out of 7 billion people to see this deal? Like, there's a lot of people that have money, and there's a lot of people that need to make money for investors. So why are you the person? And oftentimes people can't articulate why they're that person, other than maybe that they're just a star athlete. That would make me uncomfortable. Like, if it's just about you being a star, then it's got to be, to me, there needs to be more, a little bit more substance there. So we think about that a lot, like the why.
Yeah, and talk a little bit about that. So why does NextPlay Capital get the opportunity to invest in these funds that are oversubscribed, right? I think that's the other really interesting thing.
Why us?
Is I'll talk to some buddies who are very successful, and we always joke around, is when you're first starting off and you're trying to raise money, it's really hard. But then once you're successful, everybody wants to give you their money, and then you've got to start telling people no. Yeah. And so for you guys, what makes a good partner? What makes you guys look at an LP and say, yeah, we want to have you as part of our fund? What are you guys looking for?
It's a great question. So there's two parts to that. One, how do we actually get into these funds that are turning away not a dollar, hundreds of millions of dollars that are trying to get in? And really, it's three things. It's our long history of relationships, and relationships it's such a watered down statement. Everybody's got relationships, right? But these are friendships. These are people that we break bread with. Our kids go to school together. We've done deals over the years with. We've intimately connected beyond just the transactional component of work, right? And so when you have that type of history, it creates a network effect. And so all of a sudden, you become validated by other elite people within the community. They go, wow, we really like working with Ryan and the NextPlay team. You should meet those guys. And all of a sudden, people want to be around people they enjoy doing work with. Again, it's, sometimes the philosophies of life are really simple. It's just like being a good person and being kind, it can go a long ways. But you got to earn that. You got to earn respect. It's not just given to you. And so we've earned over the course of years the ability for other people to allow us in and to convince other folks to allow us in. And so when IVP lets us in, it makes it easier for Andreessen to let us in. And when we're in Andreessen, it makes it easier for and it creates that network effect. And once you're in, how do you make sure you bring value? And what does value add mean? And when you think about the community that builds up NextPlay, we have men and women in 32 of the major cities around the country that are influencers or decision makers or can provide value in any one of those cities. We have corporations like Google and Ashley Furniture Family and Publix and others that are part of our community. We have partners from all the different firms that are investors in our community. We have owners that are part of our community. We have athletes that are part of our community. We have experts that are part of our community. And through that, we have to figure out how to make sure that community can be accessible to our GPs. So we've tried to create our own club. And so to your other part of your question is, who do you guys let in? We spend a lot of time trying to understand people that want to be a part of this club, that want to be able to learn and educate themselves. If you come in and say, hey, I'm going to put money into your fund, and I go, great, explain to me what we do, and you can't explain it, you're not going to put money in.
Right.
There's no reason for us to have you in there. You have to be able to learn and understand how your dollar is being put to work, how you're a part of this bigger system, so that when people ask you why you're part of NextPlay, you can articulate, hey, this is a part of my portfolio. I've tried to allocate in this way because I think it's going to help my overall portfolio generate these types of returns. This is how their money's being put to work. It's in 80% in the funds, 20% to co-invest. These are the types of deals that, if you can do that, you're in.
Right.
Kind of.
Right.
And then there's more, right? They got to understand what is your capacity to be in. How, we obviously don't want you to put all your chips into one basket. We want you to make sure you're diversified so that you're not relying on us to generate all the returns. And at the same time, if it doesn't go right, that you're relying on us and therefore you get angry at us. So we want to make sure that the athlete is well balanced and disciplined and wants to show up.
Right.
One of the hardest things for athletes to do is to show up. So much comes at them. But to go to a conference, or go to a meeting, or go to a boardroom, in the off season, during the season, that's hard for a lot of guys to do.
Yeah, it is.
But that's the difference between really learning and engaging and building relationships, and taking your business of who you are, your wealth, to the next level, is showing up. And so we want people that want to show up, that want to learn. And when we think about some of the other things we do value add, I mean, we did 20 plus events last year. We did private summits. We took a group of athletes to Vegas, not just for Vegas, but for CES. And CES is the largest consumer electronics show. And we walked the floor with the founders of Google Ventures, and they pointed out the latest technology trends and why some trends are good and why some trends are going to fall. And we had a private dinner with 15 of the top founders that are running companies at CES and talk to them intimately about their strategies. We do tours where we'll take our LPs on private tours and let's go sit down with partners at all these different firms and learn their investment philosophies and understand their strategies and how their best practices, so that we learn and the athletes are able to learn from literally the leaders, and dinners and so many other things that we try to do to give our communities the ability to cross-pollinate and engage with one another. Because to your question a while ago, maybe I didn't even answer, is why am I sitting here? I'm sitting here because a lot of people did that for me. And I showed up and I took advantage of the opportunity, and it has given me now the platform to hopefully do that for other folks.
Yeah. I love your emphasis on the word partner too, and partnership, right? Because it has this long-term mentality of the patience of playing the long game of, it's not just a transactional deal of, I've got some cash, I'm going to throw it at you, you go do your deal and come back and give me a return. It's so much more than that. And the access to the network is people want to do business with people that they know, they trust, they like, and there's a lot of power in that.
Yeah. And quite frankly, I mean, I've done deals. I've invested in things where I didn't like the way the investment went or how it was treated. And, we've probably all looked at deals where you've invested and you don't hear anything for 6 months, 12 months. You're like, man, for me, I'm thinking worst case scenario. That's very uncomfortable. Right. So being able to make sure people understand, one, where their dollars are, that there's transparency across that. But also, what else is the firm doing? I get where my money is doing. Like, what are you doing to help my money grow and help my money work? And we spend a lot of time on that stuff too. Yeah,
that's great. Jumping into some kind of hot topics that are the exciting flavor of the month. Last year we saw it was a little bit of Bitcoin, right? Cryptocurrency, blockchain. Today a lot of it's the esports conversation. So. I know we don't have time. We could do separate podcasts on every single one, and I'm not looking for a specific recommendation, but when you think of blockchain and cryptocurrency, what are a few nuggets that our listeners should pay attention to?
Yeah, it's a great question. Obviously, it's a really hot topic, and it's not just a hot topic, at dinner tables across the country. It's across the globe, right? And that's the part that's really different. And I think it's really interesting that you're having people have conversations about cryptocurrencies globally now. It isn't just about VR in Silicon Valley or healthcare in Boston. These are conversations that are globally, and that's to me where it's really transformational. Is that it has the ability to impact the global economy in a bunch of different ways. The other side of that is also that since last November, $600 billion is evaporated, right? Because of the correction and the downturn, right? So you have to be willing to go into this environment if you're going to dabble, understanding that it is very new. It is at the very beginning. It's not even the first inning. Game hasn't really probably started because there's no regulatory, the regulators haven't come in and started to put some framework around it. So it's brand new. So you're going to see a ton of volatility. You're going to see a lot of ups and downs, and you're going to feel like you missed out probably more than you made money because it's going to continue to go up and down. So to me, one of the things that first point is you have to have a long vision. You got to play the long game in this. If you want to put some money in and think about leaving it there for a while, that's great. There's different strategies out there where people are trying to hedge and try to figure out the markets from that strategy. There's a few funds out there, and you and I have to spend some time talking through what funds we think are exciting, and quite frankly, what funds we can learn from. And then the great part about the industry is oftentimes the leaders in this industry are writing. And they're writing a lot of information about it, right? They're writing white papers, and they're tweeting, and they're blogging. And so I really would encourage people to say, okay, here are the 5 or 10 or individuals that you should spend time. And I'll send you a list of people so maybe you can share it with your community of kind of the thought leaders in this space. And if you start to take their information, you see all what they're writing about, it'll help give people a better understanding. Because the other side of it is, a lot of people get taken advantage of in this, right? It's when you see a gold rush, there's a lot of people that sell fool's gold along the way. So you got to make sure you're protecting yourself from that as well.
Yeah. So when you say long term, I think this is something that we get caught talking to our clients about, or just in general, is when I think long term, I'm thinking long term, right? What define that for you if you had to?
Yeah, that's a good question. Put some perspective, put a number around it. I think where we are, I think over the next 5 years, and you're going to start. If I'm going to put money in, I'll just say what I've done personally. I've put money into Bitcoin. I've put money into a hedge fund because I want to learn from the hedge fund. Right now, that thing is getting slaughtered. But the reason I like this fund is they give me a lot of information. They're writing reports. They're really explaining everything that they're doing and everything that's happening in the market. And that's giving me a better understanding of, I think, where things are going. I'm a long-term holder in Bitcoin, long-term 5-10 years. I think that'll be a store of value, and I think it'll be a place where, whether in this country or other countries, if you want to put money into something that won't be correlated to the markets, won't be correlated to your government, won't be correlated to anything else, and you want to store the value, I think that Bitcoin will be that. So yeah, that's kind of my.
Yeah.
I didn't give you an exact number.
Yeah, no, I mean, that 5 to 10 year, I think that's really helpful just for our audience to hear, is because we live in such a day-to-day world that 5 years sounds like an eternity, but I mean, it's really anything under that's just noise.
Well, just go back. I mean, you just go back to, traditional markets and look back 5 years, 10 years, and think about if you had positions in, I mean, I tell people all the time, I should be mad at my parents because I was on the Apple computer all the time and I bought Nikes all the time. Right. Why weren't they buying stock? Because if they put a couple bucks in the Apple back then, what it would be worth today? Right. So, beyond just Bitcoin, like what else is going on in the world today, in companies that are, really being transformative early on today that you see a lot of people using, that you can take positions and have long-term holds on them. Because if you do that, you can generate some really nice outsized returns.
Yeah, and in the crypto world, it's really interesting. It's, what I'm really fascinated in is you're starting to see a lot of conversation around indexing products.
Yeah.
Because there is this little bit of, we don't know what that world's going to be like. There are 5 different ways to kind of play the crypto world. Is having exposure across them of an understanding, though, that this is a long-term deal, and what you're saying of gobbling up research and knowledge and making adjustments along the way, but just being really patient with that. And another area that we see that is exciting, that the data is just crazy, is esports.
Yeah.
Right. I read a report the other day that it's quickly going to become the second largest sport behind soccer globally, and so that's something that's really interesting. We've actually have a client, who's a Major League Baseball player who's equally as respected in this esports world, and so it's fascinating conversations with him, and he's obviously diving into that. How do you look at the esports opportunity?
I think the esports opportunity is fascinating. I think the numbers, again, they don't lie. I mean, again, another sector to invest in that's global. Again, I mean, a lot of the numbers that we're seeing, why it's such a global phenomenon, is what's going on in Asia. The amount of time and energy that young men and women are putting into games in Korea and other places in Asia is fascinating. I have had a chance to go to League of Legends championships matches. I've had a chance to go to their headquarters here in LA. And you look at what's happening with Fortnite and the amount of money that they're generating. Unbelievable, and it's real. And the interesting part about e-games, though, about gaming in general, a lot of people tell you it's also a hit business. So you have a lot of gamers out there, a lot of people that are trying to develop games. But if the way that games usually work, they go up, they come down, and then they tail off. And it's there's a few games now that have been able to have sustainability for a longer period of time. But if you're trying to invest in that space, again, you have to be obviously careful, because just because somebody made a hit today doesn't mean that they're going to continue to make hits. So you have to understand their strategy on how they're developing, where the engineers are, the cost of production, storylines that they're putting into it, all of the other things, like the actually underlining business of running those games is easier said than done. But yeah, I'm a buyer. I'm a believer that it is going to be the future. We've all played games at some level, right? And what happens now, you have the next generations that are literally, it's entrenched in their everyday life.
Right.
And it's beyond just consoles. We're now moving from desktop to now mobile. It's now become ubiquitous in our life that people are playing games universally. Now I can literally play in an instant with somebody in another country. That connectivity is fascinating, right? Yeah. And so to me, it's something that we look at, and I also think about what's going on around the gaming world, right? From a streaming standpoint and a pixel standpoint, and all the technology that has to go around the game to make that experience better. And so those are things that we think about.
Yeah. And then kind of one last area that I get asked a lot about is just interesting is AI. How do you guys think through that?
Just like the internet was transformative when we were coming up, and people are like, wow, now I can, I don't have to go to my encyclopedia that lines my entire hallway to find information. It changed the way our ability to gather information. And what AI now has the ability to do is to take not only current information, but it can take information from the past, whether that's in baseball, whether it's in healthcare records or whatever it may be, and aggregate that information and synthesize that information and analyze it and produce something that we've never been able to produce or understand before, or that would have taken a lot of time and energy and effort from a human level to be able to understand all the intricacies and how things work together. So I believe AI will be a part of, it already is, our lives in so many fundamental ways. You're seeing it from on the voice side with Google Home and Alexa. You're seeing it in healthcare, being able to create customized medicines, because they now can take whatever sickness you have and compare it to not just the 10 patients they've had in the last year, but the hundreds of thousands of patients that have reported something very similar to what your elements are. to being able to read a scan quickly, right? A scan now can, an X-ray scan can be read by AI faster than the human and give you a better, accurate reading.
Yeah.
And you see it now in finance, right? I mean, it's going to be really hard to outperform computers and on the public side. Like, it's just to say that you are differentiated on the human level, that you can be a differentiated picker. Most people would argue to say that's impossible now, right? So that's commoditized now. So I think AI is fascinating, and again, it's one of those things that's invisible in technology. It's behind the scenes,
right?
And yet it will impact our lives in so many ways that we can't even imagine.
Yeah, I love this conversation just in the sense that we talked about 3 kind of verticals that truly I think we're going to look up 20 years from now and go, this has completely changed the way that we do life. But within that, to try and invest in it on your own is very difficult, right? And it's the importance of partnering with experts and having a team in place and making sure that you're not just doing one-off deals because I go back to almost the original thing as an agent when I choosing an agent as a player when they tell you, hey, do your due diligence. I'm like, I'm 17 years old. I'm in high school. I don't know what that means. Like, Who does he represent? Oh, he's got some good players. There's my due diligence, And I think it's
diligence
kind of,
by association.
Yeah, I think it's kind of the same way you can be naive when it comes into investing and saying, hey, my teammate who's a veteran in the league who makes a lot of money because he's really good at the sport, he's invested in that. That's good enough. And I just think that there's a warning there, and that's not just for athletes, right? I've seen it with doctors. We've seen it in the Bernie Madoff deal, right? Yeah. Is you really have to, if you're going to step into these waters, you've got to show up and do the work.
Yeah, you got to show up, and it's okay if you don't want to.
Right.
That's the great part about being an individual that has made some money and has the ability to diversify their portfolio. You can hire people that can help do that for you, right? And then you got to figure out, okay, well, who do I need to hire, right? Then that's a whole nother conversation. But there's a process in which you can do that to help give yourself an opportunity to win there. And that's where I think sometimes you get what you pay for. Mm-hmm. Right? There's certain sayings that have stood the test of time, right?
Yeah.
And that's one of those sayings that's really true. And so you really do get what you pay for, and you have to be able to be as much time and energy that we put into our careers as athletes to be elite. It sometimes baffles me why we don't put the same amount of time and energy to making sure we're preserving our hard working, the money that we work so hard for, or to protect our family or the next generation, and who are let into our camp.
Yeah.
And that's something that how important that is to me, and I think about all the guys and the women that I know that do it at a high level, and I have so much respect for them, and hopefully it continues to spread. We'd rather players start talking about not the best deal that they're in because their buddy's in the deal, but you know what, man, I said no to these 5 deals, and here's the reason I said no.
Yeah.
Like that, I didn't hear that in the locker room. Nobody talked to me through why they said no.
Yeah.
Because they didn't have anything to compare it to.
Right.
And so when they had the skill sets to compare and contrast, I'm like, I didn't say no for boom, boom, these 5 reasons. You're like, oh, wow, okay, great. That makes the locker room, everybody gets better in that situation.
And as Brandon said, I think that's where I love you guys' commitment to education. Brandon said, during your last educational deal that he was up there, he goes, just like an athlete getting reps in the weight room, right? When you get reps of hearing people pitch and hearing deals come across, and you've looked at the 1,000 deals, you start to be able to identify, okay, this is standard routine. This should be a given, and then wait a second, this one's an outlier. Okay, maybe I'll pay attention to that. And it makes it a lot easier to say no to a lot of them when you've got enough reps in.
Yeah, absolutely. I mean, let's say football, right? I mean, there's some great universities, UCLA being one of them, that if a young man was coming out and wanted to go to the NFL, and he played at Texas or UCLA or Florida or Georgia or Ohio State, there are some schools that have historically produced high-quality players. Now, there's also schools like Humboldt College or that probably have a program that's probably decent. the probability of somebody coming out of there and being an elite, not just getting the league, like an elite player, that's pretty low. And so there's all kinds of deals, right? But ability to understand where that deal is coming from and why that person, even though they're playing the exact same sport, even though they're building the exact same company, why this person A has a higher probability of success in player B,
right,
can be because of numerous things. But to your point, the more that you see it, the more reps that you see, and the more data that you're able to accumulate, you can start to make those assessments a lot quicker and easier, and you learn how to say no a lot.
Yeah. So we spent a lot of time talking success on the field and success in business, and while those are two great things, I think what I admire most about you and your career, even before I ever had an opportunity to sit down with you, is hearing your commitment to community, impacting others, really living out. I've been blessed to be a blessing. I think of your foundation that you started. Can you talk about where that came from? This sense of giving back and being a servant leader.
Yeah, it started both of my parents. I got to give both of them credit because they both serve people and continue to serve people all the time. And I saw that as role models. And oftentimes you emulate what's around you. And so, my father has been relentless, in his effort to help other people. And so much so, at the sacrifice even of his own family. He is that committed to serving others and helping people win, and I've seen that in so many other areas. And it wants nothing in return, and to see that type of commitment and selfless acts is inspiring. And then my mom was just somebody that always wanted people to feel welcomed and to feel loved, and so she always created an environment. If you were somebody coming over to the house or you were new, she was going to have cookies out and rearrange the furniture. If I came home, I never saw cookies. I didn't even see any of that. But if I told her I was bringing a French, because she wanted that person to feel like they were welcomed and feel special. And so I think having those types of role models was really important. And for me, a lot of it comes back to my faith and being a Christian, being a believer, and being a servant leader is about putting others first. And quite frankly, it's really selfish. At the end of the day, it's kind of selfish on mine. And the selfish part of it is the fact that I get way more back every time I give, right? Yeah. And so whether it's through the foundation or business, the more that I give, the more that I receive. And I always tell people we have a saying that I created when for the foundation: never miss the opportunity to give, because you may miss the opportunity to receive.
Wow.
Right? And so that to me is something that's been fundamental in why we started the foundation of trying to educate and teach young minds how to embrace the philosophy of giving. And quite frankly, when I think about it, we try to teach our students one thing. When's the last time you asked a family member or a friend, how can I help you today? That's a simple question, but I'm sure people even listen to this, or all of us, when's the last time we asked our family member or friend, like, hey, what can I do for you today? How can I help you? What can I be of service? If all of us did that on a daily basis, things would be, our little world that we live in would be better, right? Yeah. And so that's really important to me, and quite frankly, it's how I've built my foundation. It's when I built our startups, when I built our business now, is we saw a need, we wanted to find a way to address that need, and it had nothing to do with money, and my wife might get mad at that, but it had nothing to do with money. But more importantly, it's like, if we can solve this need, and we're the only individuals that are uniquely designed to solve that need, then we should do it. We should raise our hand, and that's what gets me excited and allows me to bust my butt and work hard and try to encourage others to join our team.
Yeah. What would you say to our athletes and even our founders who've been successful of the platform that they have to impact people's lives? So what advice do you have for them?
Yeah, there's probably there's three things. One, the reward that you're going to get from it. I kind of just described, right? Yeah. You're going to. There's no better feeling. And I've played in the Super Bowl. I played in a Rose Bowl, and I've made money. I've done a lot of things that would give you a great feeling. Than when somebody else says, "Thank you for changing my life." That's an unbelievable feeling. that you can do that, and athletes have a platform that we can do that. And sometimes doing that doesn't mean you're writing a check. Sometimes it means showing up. Sometimes it means listening. Sometimes it means giving somebody a hug. Sometimes it just means having your presence of greatness in the realm that they're in, and giving somebody an escape from the situation that they're in. That to me it can be game changing. So using that platform. The other thing is, quite frankly, it's great for business. If you have the ability to use your platform to give, well, guess what? You're going to start to get around other people that are givers,
right,
and that are like-minded. And hopefully those are good people, and you start to be a part of the community. And that to me is really important as you transition. For me, it's been great that I laid a foundation in the city of Tampa of supporting and giving back to that community, because that community now is giving back to me in so many ways, right? They developed an understanding of who I was as a person, as a man, not who I was as a number, right? And so that's the other thing, is it now separates you, and if you can move beyond where people get to learn who you are as a man or a woman, not just because of who you are or who you play for, that to me is what's really important in the service. And one of the things that I think is interesting is the legacy play, right? The third thing and that's the legacy play of how do you position yourself. And I don't know, maybe there's somebody out there, but I haven't met them yet, that got there by themselves. There was a coach, there was a teacher, there was a parent that went out of their way. They went above and beyond to allow you to achieve what you have been able to achieve. And so the legacy of taking what that person gave to you and sharing that with somebody else, that to me it's a responsibility. And so those are kind of the three things that I think an athlete can take away from the platform. And one of the things that I did, and this is beyond, I guess, just philanthropy, but I went and I found out who all the suite holders were. I'm giving my secrets away now. And I found out who all the suite holders were, and I wrote them and said, thank you for supporting us this season. I'd love to meet you after the game. Here's my cell phone, here's my email, and love to connect with you. Even it'd be great. Let's grab lunch sometime. Guess what? All the suite holders are all the businesses in all the community, and they're filled with all the CEOs and executives from all the companies that your city, that your team's in. And that was an interesting way for me to build relationships. So,
and when you're currently playing, that's when all those doors fly open, right?
Fly open.
I mean, it's been even fun to watch the end of Kobe's career, right? Of how strategic he was, of inviting people to lunch. And it's like when you're Kobe Bryant on the Lakers, you can go anywhere you want. LeBron now, you can go anywhere you want. And I think that you don't have to be Kobe or LeBron. To your point of, in the baseball world, you could be the 25th man on the roster. And if you're in there for the Cleveland Indians, guess what? Everybody in Cleveland's going to open their doors to you. And so I think that's one of the biggest assets that goes so underutilized by the athlete community.
Well, it takes initiative. It takes you being proactive.
Yeah.
And it's intimidating. Guys are like, I don't know what to say in a meeting. I'm not sure if they really want to listen to me. I'm kind of a private person. I don't know what to ask that person. The best thing you can ask somebody is, hey, I'd love to hear your story. Tell me how you got to where you got to. I'd love to hear about where you made some mistakes. And people, they will spill their guts to an athlete and
100%.
Tell them all kinds of things they would never tell anybody. But that is where you start to learn and get real good information that can be helpful. And I tell guys, it's just like sports. If you're going to make a great play in sports, you got to put yourself in a really uncomfortable situation.
Right.
You got to take some risk. It's in life. The only way that you grow as a human is to put yourself in uncomfortable situations.
Yeah.
And so, if you're uncomfortable, like I don't really want to get out of the house. I want to lay on the couch. Well, you're going to get what you put into it, right? And so when it's done, and you're like, man, I don't know why I don't know anybody.
Yeah, no, that's great. As we kind of come to a close, we ask a few questions across all the podcasts. Is the first one that we ask are, what are some books that have impacted your life? Or maybe it's podcasts. If you were going to make some recommendations to our audience, listen through, is there anything that comes to mind as people want to venture into the business world?
There's one book, Never Eat Alone. It's a good book. I'm sure you probably read it.
Yeah,
it's a good book. It's just basic principles on networking and building relationships. And again, that's actually where I got the idea of writing.
Wow.
The thank you notes to the suites was because I read that book. I'm like, oh, well, maybe I'll take it a step further. That book is a good book. 0 to 1, Peter Thiel. That's another good book. Give and Take by Adam Grant, another great book, and that's a book about making an investment for the long term and why the difference between givers and takers and who wins in the short run and the long run. That's a good one.
And that's the type of the educational stuff you're doing. Aren't you guys having an event where the author's actually going to be there?
Adam and Emmett Smith are coming on. We have an annual event, Iron Sharpens Iron, where we usually bring in two elite individuals together and go off the record and talk about failure, talk about success, and talk about all the things that hopefully make them who they are, and what separates them from others. So, yeah, those are opportunities that we spend a lot of time bringing folks to. But yeah, those are a couple books I can think of.
Yeah.
Wild at Heart, that's a good one.
Yeah, it's a great book.
Yeah.
We've talked a lot about investing. One of the questions we ask is, for you personally, is there one best investment or worthwhile investment that sticks out in your mind? And it's not always monetary. It could be time. It could be resources. What comes to mind when you think of the best investment you've made?
That's a great question. I'm going to say, I'm going to say something and had nothing to do with money. I went to Vegas, and I don't know why I keep talking about Vegas. I went to Vegas and was out all weekend in Vegas. It was Sunday. I got invited on Monday to a dinner in San Francisco, and I was down in LA living primarily. And I said, man, I don't really want to go to a dinner. It's a long weekend. I had work that I needed to do, and it really wasn't a lot of work, but the dinner just was going to be really hard to get to and it distracted. But I said, I'm going to go to the dinner. Well, I ended up going to that dinner, and I ended up meeting a partner from Red Point, who was an early person at Twitter, the founder of Foursquare, the founder of Uber. Who else was at that dinner? One of the players from the movie 21. So I met a group of men, the head of growth at Pandora, who have become now really close friends. And there was no reason for me to be at that dinner. I didn't even know I got invited to that dinner. But I showed up, and we had great conversations, and we talked about a lot of things. And I think that was probably one of the best investments, because I now have developed relationships with men that have achieved certain levels of success in other areas, and especially in a world that I was foreign to. And they've been really helpful for me.
Wow, that's great. Well, before we go, if our audience is interested in connecting with you, learning more about Next Play Capital, your foundation, where's the easiest way to connect with you? Are you on social?
I'm on social. I'm not real active. You can see a lot of pictures of my son on social. Ryan Nece Foundation. We spent a lot of time and energy coming up with that name. But that's where our foundation information is, RyanNeceFoundation.org, and with NextPlay, nextplay.com. People can, look me up there as well. So all the emails, everything flows back to me somehow, some way.
Great. Well, thank you again for taking the time. This has been a lot of fun and I know valuable for our audience.
Yeah, no, I appreciate it. Again, like I said, what you and your brother are doing, what you guys are building here, what you guys stand for, it goes beyond just money. Right? You guys are helping to build lives and support people in unique ways and educate the community. So I know we see eye to eye in that, or like-minded, so I'm glad I could be a part of it.
Well, appreciate the kind words. Well, audience, thank you for listening to another episode on the Athlete CEO podcast, and look forward to sharing another week with you next week.